Preparing for a private fund administration careers at Apex Group, IQEQ, and Alter Domus interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a private fund administrator actually do? The interviewer wants to assess whether you understand the fund administrator's purpose in private markets, including accounting, investor servicing, reporting deadlines, and how outsourced providers support fund managers without making investment decisions. While answering, focus on fund accounting, NAV or capital account reporting, capital calls, distributions, investor statements, audit support, and the service provider role versus the investment manager's decision-making role. Fund administration is the outsourced operating backbone for private funds. In this role, I would support fund accounting, investor allocations, capital calls, distributions, financial reporting, and client communications. The investment manager makes portfolio decisions. The administrator helps ensure records, NAVs, investor statements, and regulatory support are accurate and timely. At firms like Apex, IQEQ, and Alter Domus, the value is accuracy under deadlines plus strong service to both managers and investors. Question 2. How is a fund administrator different from a fund manager, custodian, or depositary? The interviewer is testing your understanding of the private fund operating model and whether you can distinguish accounting, oversight, asset safekeeping, and investment management responsibilities in a client service environment. Make sure to cover the manager's investment authority, the administrator's books and reporting role, the custodian's asset safekeeping function, and depositary oversight where relevant, especially in regulated fund structures. The fund manager is responsible for strategy, portfolio decisions, fundraising, and investor relationships. The administrator independently maintains the fund books, calculates NAV or capital accounts, processes investor activity, and produces reporting packs. A custodian safeguards assets, while a depositary has oversight duties in certain jurisdictions. In interview, I would emphasize that administrators do not manage money. They provide operational control, transparency, and scalable reporting infrastructure. Question 3. Walk me through the NAV or capital account process for a closed-end private equity fund. This question evaluates your technical grasp of private capital accounting, including beginning balances, capital activity, expenses, investment valuations, allocations, reconciliations, and final investor-level reporting outputs. In your answer, talk about prior period roll forward, capital calls, distributions, management fees, expenses, fair value marks, bank reconciliations, LPA allocation rules, review controls, and investor statements. For a closed-end private equity fund, I start with the prior period capital accounts, then post capital calls, distributions, expenses, management fees, realized gains, and fair value marks on investments. I reconcile bank activity and portfolio records before allocating results under the LPA. The final output is not just a NAV number. It is partner capital, investor statements, schedules, and support that a reviewer or auditor can trace. Question 4. How would you process a capital call for a private fund? The interviewer wants to assess your familiarity with commitment-based funds, investor notices, allocation percentages, unfunded commitment tracking, cash reconciliation, and the practical controls around calling capital accurately. Be sure to mention reviewing the LPA, commitment schedule, purpose of the call, pro rata calculations, notices, due dates, bank details, cash receipt matching, default handling, and updating unfunded commitments. A capital call begins with the LPA and commitment schedule. If a fund needs $10 million and one LP owns 5% of commitments, that investor generally contributes $500,000, subject to exclusions or defaults. I would verify notice wording, due dates, bank details, expense or investment purpose, and allocation logic. After cash arrives, I reconcile receipts, update unfunded commitments, and reflect the call in capital accounts. Question 5. Explain a private equity distribution waterfall in simple terms. The interviewer is testing your understanding of how fund economics are distributed between LPs and the GP, including preferred return, catch-up, carried interest, and LPA-driven calculation differences. While answering, focus on return of capital, preferred return, GP catch-up, carried interest, European versus American waterfalls, clawbacks, recycling, and why administrators must follow the governing documents precisely. A waterfall determines how sale proceeds move from the fund to LPs and the GP. A common European waterfall returns contributed capital first, then preferred return, then GP catch-up, then carried interest split. I would always anchor my answer in the LPA, because hurdle rates, recycling, escrow, clawback, and deal-by-deal versus whole fund mechanics can change the calculation materially. The administrator's role is disciplined calculation and documentation. Question 6. How are management fees and carried interest typically calculated in private funds? This question evaluates whether you can distinguish recurring fee mechanics from performance allocations and understand how committed capital, invested capital, hurdles, side letters, and review controls affect calculations. Make sure to cover fee bases, investment period step-downs, GP carry, preferred returns, LPA terms, side letter exceptions, investor impact, and the importance of documentation and independent review. Management fees are usually charged on committed capital during the investment period and often step down to invested cost or net invested capital later. Carried interest is the GP's performance allocation after investor return hurdles are met. In practice, I would calculate both from the LPA, check side letters for exceptions, and document assumptions. Small percentage errors can create large investor impacts, so review controls matter. Question 7. What would you do during onboarding of a new private fund client? The interviewer wants to assess your process mindset, client service approach, and ability to translate legal documents, investor data, reporting calendars, and accounting requirements into a controlled operating setup. In your answer, talk about reviewing the LPA, structure charts, service level scope, opening balances, system setup, investor registers, bank accounts, reporting deadlines, workflows, and first deliverables. When onboarding a new fund, I would first understand the structure, LPA, investor base, reporting calendar, and service scope. Then I would set up entities, charts of accounts, bank feeds, investor registers, waterfall models, and document workflows. The risk is assuming every fund is standard. A strong onboarding creates clean opening balances, agreed responsibilities, and a timeline for first capital call, first NAV, audit, and investor reporting. Question 8. You find a reconciliation break close to a NAV deadline. What do you do? This question evaluates your judgment under pressure, including reconciliation discipline, escalation, materiality assessment, client communication, issue ownership, and refusal to use unsupported plugs to meet deadlines. Be sure to mention identifying the source, quantifying the difference, checking support, involving reviewers, escalating early, communicating transparently, documenting the resolution, and preventing repeat breaks. I would first isolate the break: bank, portfolio, general ledger, investor register, or FX. Then I would quantify materiality, review source documents, and escalate early if the deadline is at risk. I would not hide the issue or force a plug. For a client like a private capital manager, credibility comes from a clear explanation, proposed correction, reviewer involvement, and evidence that prevents recurrence next period. Question 9. What KYC and AML checks matter when onboarding investors into a private fund? The interviewer is testing your awareness of investor onboarding controls, regulatory risk, beneficial ownership, sanction screening, enhanced due diligence, and the administrator's gatekeeping role before accepting capital. While answering, focus on subscription documents, identity verification, beneficial ownership, tax forms, sanctions and PEP screening, source of funds, risk rating, enhanced due diligence, and escalation procedures. Investor onboarding is a control point, not an admin formality. I would collect and review constitutional documents, beneficial ownership, tax forms, sanction screening, PEP checks, source of funds information, and subscription agreement data. If an investor is higher risk, I would escalate for enhanced due diligence. The goal is to protect the fund, comply with AML rules, and ensure the investor register is accurate before capital activity or reporting begins. Question 10. How would you support the annual audit and financial statement process for a fund? The interviewer wants to assess your understanding of audit-ready fund administration, including PBC tracking, financial statement schedules, valuation support, reconciliations, disclosures, and communication with auditors and clients. Make sure to cover trial balance support, investment schedules, capital roll forwards, fee calculations, expenses, related party disclosures, valuation documentation, audit request tracking, review controls, and timely responses. For annual financial statements, I would prepare trial balance support, investment schedules, capital account roll forwards, fee calculations, expense accruals, related party disclosures, and financial statement notes. During audit, responsiveness is critical, but quality matters more than speed. I would track PBC requests, reconcile to underlying records, explain judgmental items like fair value, and ensure changes are formally reviewed before anything goes to the client or auditor. Question 11. What controls would you expect in a high-quality fund administration process? This question evaluates your control mindset, including maker-checker review, reconciliations, access management, evidence retention, exception tracking, workflow discipline, and how technology supports, but does not replace, oversight. In your answer, talk about segregation of duties, reconciliations, approvals, exception logs, audit trails, access controls, version control, review sign-offs, system workflows, and data completeness checks. Controls are essential because fund administration is deadline-driven and data-heavy. I would expect maker-checker review, reconciliations, exception logs, access controls, version control, and clear sign-offs before statements or notices are released. Technology improves efficiency, but it does not replace professional skepticism. If data flows from a portal or accounting platform, I still need ownership, completeness checks, and audit trail discipline through every reporting stage consistently. Question 12. How would you handle an LP transfer or investor equalization event? The interviewer is testing your knowledge of investor register maintenance, LPA approvals, transferred economics, AML requirements, equalization mechanics, and how investor-level ownership changes affect accounting and reporting. Be sure to mention GP consent, effective date, commitment, and capital balance transfer, unfunded commitment, tax and AML checks, equalization interest, true-ups, investor statements, and documentation. For an LP transfer, I would confirm approvals under the LPA, effective date, transferred commitment, capital balance, unfunded amount, tax documentation, and AML status of the incoming investor. Equalization is about making investors economically aligned when they enter after prior closings. That can involve interest, true-up contributions, and reallocation of expenses or gains. so early and late investors are treated as the documents fairly require. Question 13. What challenges do complex fund structures create for a fund administrator? The interviewer wants to assess your understanding of private market structures, including master feeder funds, SPVs, blockers, parallel vehicles, intercompany balances, consolidations, and entity-level reporting dependencies. While answering, focus on why structures exist: entity mapping, intercompany transactions, expense allocations, consolidation, multiple currencies, tax or regulatory needs, investor classes, and consistent valuation treatment. Complex structures are common in private funds because of tax, regulatory, currency, or investor needs. A master feeder may centralize investments, while feeders hold different investor groups. SPVs may ring-fence a specific deal. From an admin perspective, I focus on intercompany balances, consolidation logic, expense sharing, cash movements, and consistent valuations. The structure map matters because one missed entity can materially distort reporting and investor allocations. Question 14. How would you manage a demanding client when a deliverable is delayed? This question evaluates your client service maturity, communication style, accountability, escalation judgment, and ability to balance relationship management with technical accuracy during deadline pressure. Make sure to cover early communication, facts over excuses, revised timelines, internal escalation, ownership of next steps, quality control, and keeping both the client and relationship manager aligned. I would communicate early with specifics. For example, I would say the NAV pack is complete except for one portfolio valuation support item and one bank reconciling item, both under review, with a revised delivery time. Clients dislike surprises more than bad news. In fund administration, good service means ownership, clear escalation, technical accuracy, and keeping the relationship manager informed without creating unnecessary noise internally. Question 15. Why do you want to work in private fund administration at Apex Group, IQEQ, or Alter Domus? The interviewer wants to assess your motivation for fund administration, understanding of these firms' private market service platforms, career commitment, and fit for a client-facing, detail-oriented operating environment. In your answer, talk about private markets growth, exposure to fund accounting and investor services, global client bases, technology-enabled reporting, technical learning, client interaction, and a clear career path. I am attracted to firms like Apex, IQEQ, and Alter Domus because they sit at the center of private markets operations. Fund accounting, investor services, regulatory support, and technology-enabled reporting. I want a role where technical accuracy and client service both matter. My goal is to build deep expertise in private capital structures, then progress into a senior fund accountant or client service role managing deliverables and relationships. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.